Hello everyone, welcome to my channel Brilliant Bankers. So in prevention of cybercrimes and fraud management, in the next topic is electronic cards in module B. Okay, so when you hear that electronic cards, you will only remember this credit cards and debit cards. So this credit cards and debit cards in India, it is one of the fastest growing countries in the plastic money segment. So already there are 130 million cards in circulation, while is likely to increase at a very fast pace due to rampant consumerism. India's card market has been recording a growth rate of 30% in the last 5 years. So, card payment from an integral part of e-payments in India because customers make many payments on their card, paying their bills, transferring funds, and shopping. Ever since the debit cards entered in India in 1998, they have been growing in number, and today they consist of nearly three-fourths of the total number of cards in circulation. So, credit cards have shown a relatively slower growth even though they entered the market one decade before debit cards. So, only in the last 5 years, there have been an impressive growth in the number of credit cards by 74.3% between 2004 and 2008. So it is expected to grow at a rate of about 60% at considering levels of employment and disposable income. Majority of credit card purchases from expenses on jewelry, dining, and shopping. Another recent innovations in the field of plastic money is co-branded credit cards, which combine many services like one card where banks and other retail stores, airline, telecom companies enter into the business partnerships. So this increase the utility of these cards, and hence they are used not only in ATM but also in point of sale terminals and while making payments on the net. Next is payments, prepaid payment instruments. So the eligibility, what is the eligibility of the payment instruments? Bank who comply with the eligibility criteria would be permitted to issue all categories of prepaid payment instruments. No non-banking financial companies, that is NBFCs, and the other persons would be permitted to issue only semi-closed system payment instruments, capital instruments. Banks and non-banking financial companies which comply the capital adequacy requirements prescribed by the Reserve Bank of India from time to time will be permitted to issue prepaid payment instruments. So all other persons shall have the minimum paid up capital of rupees 100 lakh and positive net owned funds. Safeguards against money laundering, that is KYC, AML, CFT provisions. The maximum value of any prepaid payment instruments shall not exceed rupees 1 lakh. Okay. Next is deployment of money collected. So what is deployment of money collected? Non-bank persons issuing a payment instruments are required to maintain their outstanding balance in an escrow account with any scheduled commercial bank. So the amount so maintained shall be used only for making payments to the participating merchant establishments. No interest is payable by the bank on such balances. Okay. Next is validity. All prepaid payment instruments issued in the country shall have a minimum validity period of 6 months from the date of activation issuance to the holder. The outstanding balance against any payment instrument shall not be forfeited unless the holder is cautioned at least 15 days in advance as regard the expiry of the validity of the payment instrument. Next is RuPay debit cards. So it is a domestic card payment network established by National Payment Corporation of India, having more than 100 banks in India as member with its ATM network spread across the country. These cards can be used in all ATMs of NPCI network and POS terminals and e-commerce transactions. So this can be various types of RuPay debit cards. That could be like a card type meant for RuPay Kisan farmers availing agriculture production loans, RuPay Aadhaar beneficiaries of electronic benefit transfer scheme, RuPay debit beneficiaries under financial inclusion schemes. So these are the three type of cards. This provides an accidental insurance cover up to rupees 1 lakh without any charge to the customer. So to avail this benefit, the card must be used with minimum once in 90 days. So the existing identification modes used in new delivery channels has a major drawback as it recognizes the PIN but not the person. So it will recognize only the PIN number, not the person. Sometimes it leads to the impersonation and may cause financial loss. So to overcome this, biometric technologies such as fingerprint recognition, face recognition, voice authentication, hand geometry, retinal scanning, iris scanning, and signature verification have come into the force. So this, when the user access delivery channel, it verifies the server and the delivery of the service. If found correct, then recently NPCI introduced two variants of cards, that is RuPay Platinum and RuPay Select, with value added features at competitive interchange free compared to the Visa or MasterCards. So that's all for the today's video. For the next video, we'll be seeing about data security. So thank you for watching. Please, if you like my video, please like, subscribe and share. Thank you.